It's been a week of glitter and jitters on the big boards. Gold, that eternal yellow metal, has been behaving like a teenager on a trampoline. According to latest data from Kitco Metals, we saw gold prices flirting with all-time highs, never quite getting there. And silver, well, it isn't just the poor man's gold anymore, ticking up as investors look for a little bit of insurance in an uncertain world. Now, why the rush to the vault? Well, the Wall Street Journal here reports that you don't have to look much further than the headlines coming out of the Middle East. The escalating tensions involving Iran and the Red Sea shipping lanes has the market holding their collective breath. Reuters analysis point to a direct correlation. When the drums of war beat in the desert, the ticker tape in New York starts to dance. As the geopolitical temperature rises, the flight to safety begins. The S&P 500 and the Dow have been a seesaw this week. CNBC tells us that they are nervous about interest rates, which isn't that always the case, but they're more nervous about what a wider conflict might do to the world's gas tank. But you have to wonder, in an age where we can bounce signals off the moon and map the human genome, is the big stick still the only way we know how to talk to one another? Is war ever truly a good option in this modern age? It's a question that's been asked since the first spear was sharpened. We pray for the diplomats to find their voices because while war might drive up the price of gold, it always drives the value of human life down. But don't you lose heart, because amidst the shouting, there's been quite a steady heartbeat in this country that the headlines always seemed to miss. Right over here, we have jobs numbers. They weren't that promising this week. They were a little bit down. But there was an area where they were rising, which is something that I'm really optimistic about. Because according to the U.S. Bureau of Labor Statistics, American manufacturing is showing some surprise muscle. And the ISM Manufacturing Index suggests that small businesses, the real backbone of our republic, are still hiring, still dreaming, and still opening their doors every morning at 8 a.m. We're a resilient lot, aren't we? We've survived panics, we've survived depression, some would say COVID, and we've survived experts who told us that the end was right around the corner. We aren't just a market, folks, we're a people. And as long as there's a neighbor helping a neighbor in the real America, then we're doing just fine. The gold in our vaults, it's nice. But the gold in our character, that's what I'm all about, folks. So I hope you have some of that. I hope you have some of this. We're going to get into all of this in a second. But that's really what it's all about. So, as you know, world has been crazy. Lots going on. One thing you can say about this administration is that it is very hard to get bored. There's always activity. Here we have the Dow Jones, and yes, what a sight we have to behold. As you can see, what we just talked about, the markets not liking the instability of the global economy at this point. 475.01 is our amount right there. We are down 453. The all-time high was earlier last month, almost a month ago actually, the 10th of February. And as you can see, been pretty steady on the downward movement right there. S&P 500 kind of mimicking everything else, 6740. That's 90 points down, 1%, 1.33. On the downside, all-time high here was at the end of January, the 27th. NASDAQ, once again, still waiting for an all-time high on NASDAQ. It has been since Halloween, as we have the 29th right there. But yes, down as well, 361 points. The roller coaster doesn't look very beneficial either. However, I will say it has not gone down as much as the other two indexes. And lo and behold, what happens in the world when all this goes down? Well, Canada's down 1.38%. Mexico's down 1.18%, our biggest trading partners. Basically, the entire Eurozone and Europe all down. Some more dramatic than others. I believe here that 3% is South Africa, but South Africa and Turkey tend to be the more volatile of that sector anyway. So nothing crazy out of the ordinary there. You go to Asia and the Pacific, We have Australia down 1%. We have Hong Kong, what is up 1.7%, which is interesting. We have India down 1.37%, and Japan up just a hair at 0.62. So that is where the world sits as of right now. But what did your metals do this week? The gold and silver. Let's take a look. We know it has been crazy. So we show that this week we have lost $10.86 in the price per ounce of silver. It is at $85.25 as of right now. And that's because last week we had a huge jump at the end of the week where it started at $96. So that's where that comes from. So that is negative 11% for this week. But the year to date is a more promising picture. Since January, it has gained almost $13. It's still up almost 18% on the year, but it has been crazy recently, as you know. All right, gold. So this year, gold is actually faring a little bit better than silver is. We know last year was the year of silver, but this year, it so far has been more consistent in gold. We are down this week $185, which seems like a lot. It's only 3.46% comparatively to that of silver. It ends the week at $5,189, but the year to date, it is up almost 20%, 19.73. As you see, it is up $855, so it is still winning the year as of right now. Thank you so much. And if you would like to support this channel while buying your gold and silver, check out this QR code. And there's also a link in the description below that goes to APMEX.com. They are a place where I tend to buy my silver. But if you are going to buy it anyway, they're going to pay me a referral fee just to send you over there and say, hey, the things over there, the cultural currency are great. And they referred me over to you. So if that's something that is in your ability, something that you are going to do anyway, is buy gold and silver, here's an easy way to do it and help us out at the same time. But until next time, please remember to stay classy and current with the culture of currency.